Thursday, May 16th, market analysis, Stan Ehrlich. Good morning, 9:55 California time. You know, we start out with the indexes and then go to futures. Sometimes I go to cyclical analysis or forex or sectors and a variety of things. Today we'll just stick with indexes and futures. And I'll be sharing some of the futures with the NinjaTrader platform, my preference in TradeStation, as well. Minor data feed problems at the moment with Ninja, soon to be resolved. Here we go. The E-mini, another new high. In fact, a new high for the whole trend, the whole long-term bull market. But when you make new highs, frequently you're in this condition, which is an overbought condition. If it's a strong bull market, usually you'll get some follow through for a day or two or three, maybe even more. But the overbought condition does imply that it's about to have some sort of downside correction. Now, the new high in the E-mini is a very minor amount so far and lends itself to a potential double top. Now, it's not really a double top until the market gets all the way down to 49.62 and breaks below that low, which was on April 19th. Then we have a much more serious situation, and you're supposed to double the amount of decline we just would have had, and that would have brought it way down below my downside objectives, which have been my objectives for, gosh, I guess a month and a half now. And that would be, you know, 4,900 to 4,800, from 4,900 down to 4,800. So the size of this rally ever since May 3rd, the beginning of the month, has been definitely more than I expected, point blank. In fact, you can look at the standard candlestick chart and you can see every single closing price has been higher than where it opened, maybe with one tiny little difference there, exception. So I'm looking for a reversal. I'm looking for the market to get down below the previous day's low and close below the previous day's settlement price to generate a bearish engulfing, which we did have, for example, on the high day on April 1st. And that started me to forecast a move down, and fine, it got down to April 19th, slow. So I'm looking for another similar type of reversal, and I'm not getting it, but it could, should, probably will be very soon. Next chart is the E-mini 5-minute chart. And I think something bearish could start if it drops below that sharp little spike low at 53.28 earlier. Let's look at the spider. We have a gap to close. Now, you know, the spider only trades from 6:30 in the morning till 1 o'clock in the afternoon, California time, where the E-mini is 23 out of 24 hours a day. Therefore, the price ranges on the E-mini are significantly different often than the SPY. Nevertheless, the SPY has been around since the 1990s. I think that's correct, 93 at least, maybe a little earlier than that. So much more longer term history, and gaps are almost always closed for those markets like stocks and indexes that have the shorter trading hours. It's a tool I've used for decades. So that is another reason for some sort of a correction to start. And for the spider, I'm looking for lows at least as low as the April 19th low, and probably a little lower than that, but not a double top in this particular case. Looking at the spider 5-minute, it's been dribbling back a little bit for a short while, but nothing really happening here of any consequence yet. The QQQs have a small gap. A couple of days ago, the spider was a bigger one, and it is overbought, and it has a higher high today. So what we could get is a surprise all of a sudden that's not taken well by the market, and you drop below yesterday's low, and that's exactly what happens occasionally. And that would indicate the start of a bear move frequently. There's no guarantees in this business, so you have to go by the odds in a general sense. You got the QQQ 5-minute chart still looking pretty strong, not showing that much weakness. I can't get excited about the short side yet. What about the NASDAQ futures? Now there's the double top potential also in the NASDAQ futures, and the 5-minute chart on the NASDAQ. We need to start dropping off some if I'm going to be calling this break, and it's so far not so good. The Russell is a whole different animal here. This is the 1 day or daily chart, and you can see that we have been stopping all of the major important rallies for the last 2 full years. Going back to about January of 22, 23, and now it's, May of 24. So a little over 2 years in the same price range we are now. That's a very strong implication. If it does it again, and why not, then all the other indexes are highly likely to pull back with the Russell. The Russell's not probably going to do it by itself, and I'm talking about 2 or 3 or 4 weeks down. So I keep an eye on this one in particular because of its historical precedence at these levels. On the other hand, if the Russell can start to close above recent highs that were made about April 1st, that's a totally different story, especially if it can get above 2212 or so and have a major historical resistance level breakout. And the Russell 1-minute chart shows some modest weakness developing during the day. No surprise, it's in that resistance area. And I believe it was overbought today for the first time, or maybe it's the second day, but now overbought. Okay, so the YM Dow futures, possible double top, also not quite as strong, not a new high quite yet, but very close. And we don't have any gaps because it's a futures contract, but overbought conditions. This is ripe territory for the beginning of something on the downside. I would not encourage people to be going long at this price. Next, we get the YM short-term 1-minute chart, and it's got a little support that's built in the last couple of hours, 3 hours at 40,103-ish. Breaking below that could develop into something, and of course, breaking below 40,017 would start something a little bit more aggressive on the downside, I would expect. Bonds at the top, and now just slightly above the top of this great looking downward slanting channel I've been showing you guys for months now. That appears to be a potential breakout on the upside, but we're low and last. And if we drop down below the top of the channel, the yellow line here, then it's a false breakout. And if it stays inside the channel, when so far this morning it's been a little bit above it, then you have a false breakout, and you could go all the way back down to 112 and maybe even a little lower, which I don't really expect at this point. The media indicates that maybe September is going to be the first drop in interest rates. In fact, that's speculation, of course, but that's the way the market sees it right now. That's what the government's telling us. So optimism is built in already. And guess what? We're overbought in bonds and in notes, which had an official breakout yesterday, but now to resistance area. So you're overbought today for the first time in notes and overbought in bonds for a couple of days. And at resistance levels, I can point out, as I just have, reasons to look for the beginning of a down move of some sort in the interest rate futures, and that should help start the move down in stock indexes. Let's go to the soybeans. Soybeans, we got the bottom of the market on a bullish engulfing buy signal on April 19th. Great. So far, the high was about a week and a half ago, and we've had a minor downside correction after getting overbought. Classic. We're holding pretty well now for a week or so, not at any particular predetermined level, but I'm not going to be surprised if it starts to make new highs again and continue to work its way up. The minimum upside objective on this double bottom formation, with the first low on February 29th and the second low being a bullish ER buy signal on April 19th, that minimum upside objective could be, I'm forecasting 1340. We'll see what happens. Soybean oil is desperately trying to create a last shoulder low on what I don't really like to talk about, but I have to because we've got the shoulder back on July of 22, the head of the formation being on May 30th or so of 23. And the last couple of weeks, the last shoulder looks like it's forming. And now it's about the same size time-wise, left to right, as the first shoulder was, which is approximately a month or so, it looks like. July 5 to about, right about in here, July 27, a little less than a month. And that's approximately the same as we got right now. And I'm going to pull this little diagram over to the right slightly and make it a little bit bigger because I think that would be appropriate if I can grab the thing. Just a moment. There we go. Okay, that's much better. So, still head and shoulder bottom maybe. Why don't I like this? It's 2 years inside, which is unusually large. And when you have something unusual, it does not lend itself to turning out to be a good result. So far, I'm a skeptic on the oil. Plus the fact that it's a head and shoulder bottom at the end of a big sideways trading range, and normally they're at the bottom of a big break. Next chart. Soybean meal's doing fine. We bought the bottom of the market with an ER buy signal on February 29th. We made really great new highs only a week or so ago, got overbought, and of course, a downside correction has happened. Is it over? We had a bullish engulfing a couple of days ago, and yeah, maybe this little low will hold. I don't really care. It could dip down a little bit more, maybe to 350. We're 370 almost at the moment. That wouldn't kill this support area and a little bit more bullish expectations. I have to be looking for about 400 to maybe 428, 430 on this rally. Next, we've got corn. We got the bottom of the corn market to the exact day, and that was February 26th with an ER bullish engulfing buy signal. It too has made new highs in the last couple of weeks, doing pretty good. Last couple of days down because we did get overbought a week or so ago. No surprise. Now, there's pretty good support here at about 453, where we bottomed out actually a few days ago, and that could be tested again. I'm still bullish. I don't think this market's going to go down too much more, and I do think it's going to make another set of new highs up to 500. Next to wheat. Bought the bottom in the wheat market to the exact day on March 11th. This has had a whopping great rally up to and through resistance levels and new high ground since August of last year. So I'm continue to be bullish on wheat for a trending market, but it could drop a little bit more, as I said, down to about 647 and maybe 620. But in this little green zone is where I expect it to bottom out in the next few days. Next, cattle. New highs. I started to get bullish or friendly a couple of days ago because of the activity we had on the 14th of this month. And so far, so. Minor new high. Looking for a rally up to about 180, 181. And it could get even stronger than that. So I think we're on the way up in cattle. And hogs are a different story. Except guess what? Today we have a bullish engulfing Japanese candlestick. It is not an ER buy signal, but we were almost oversold down to 25, not quite. Today's custom RSI low is 26.59, so we only missed by 1.5, pretty close. We were oversold for several days back at the beginning of the month. It did flatten out, and today is one of the first price action indications that it's ready to start to rally more. So this is going to be, I think, the rally back up to about 101, and it could get up to 103. But the minimum downside objective on this kind of sloppy head and shoulder top, the first shoulder was not very well developed, but it's there. The timing is off a little bit, but the last shoulder is there. It's really a not very good looking head and shoulder top, but the neckline was broken perfectly. Big down day on the breakout, normal. And we've come down already a little more than half of the downside objective, which is a 92.75. So I'm still bearish, but I think it could bounce a little more first and then turn down. And next we've got the E-mini. So now I'm going to go to TradeStation to finish up some data that the Ninja is giving me a little problem with at the moment. We'll fix that very soon. Crude oil. We got a bullish engulfing several days ago, and let me get these to full screen size. The lows were tested, which I'm afraid stopped us out of any position from that bullish engulfing, which I'm sure we took slight profits only a day or two after it happened because we started to come down fairly quickly. That was not a very good signal, but I don't ignore it. And they're oftentimes part of bottoming out, and the red signals at the tops are part of topping out. Well, that one was an exact high, but that one's kind of a similar one. It showed us the beginning of some topping out action, and then we finally got the exact high. This one's the beginning, I think, of some bottoming out action and then a new low. But now look, we're almost making a new high since that last signal. So I'm leaning in the bullish direction here. First stopping point might be 80.60, which is not very far up. And then we could get up even further than that. Now, one comment here on crude oil, and I'm dealing with TradeStation at the moment, so I did not draw in the neckline, and I think I will do that for you right now because I should have done it before. Where's my trend line? There it is. And this is a neckline on a head and shoulder bottom formation. Kill the extension, and there we go. Minimum downside objective should be, and I'm going to also do that for you real quick too, drawing another little trend line used in a different way. I'm simply going to measure from the highest high down to the neckline, kill the extension on it. We don't need that. And this is called the depth of the formation. So when you drop that measuring stick, so to speak, from the breakout level right about there down, my downside objective is 74.50 or lower for the head and shoulder top, which is so far working great. As a result, any rally should stop at around 81.25 or lower. Next, soybeans and the grains. Got the bottom in beans. Is that what we've got here? I think so. No, this is not beans. Yeah, I left a chart on this that I shouldn't have. Let's go to the next one. Natural gas. Petroleum. Very strong. New highs again. Great extended bottom. What is that, a quadruple? I don't think I've seen a quadruple bottom, if you want to call it that, in decades. So bottom, buy signal, part of the bottom formation. This one picked the bottom exactly. That's great. That was only a couple of days worth of rally in the green. There's a couple of bad signals that got stopped out right away. There's a modestly good one, but we're getting signals to go up in a bear market that's not turning around long term like this looks like it could have. Lots of support starting back in February 15th. And again, with a bullish engulfing ER buy signal and just a little bit lower. So it looked like a ping pong ball being pushed underwater and pops right back up again. And now for the last couple of weeks, we have solid new highs. And yesterday starting to break new highs for a greater amount of time. I've got to be bullish on this to approximately the test of this high back here at 2.90, let's call it. And that rally high was on January 9th. That's it. Well, I'm looking for 290, 2.90. Next chart, we've got heating oil. Oversold, possible makings of a bottom, especially since it's at a major support area going back to December 12th and lows that were made also at the beginning of January. This is starting to look pretty interesting here from a bullish standpoint. Oversold conditions, new lows yesterday, but a higher closing price, back up into the same series of trading lows we saw for a couple of weeks earlier. A little bit of a follow through this morning. You're going to have a minor upside breakout that could develop into a lot more if we start closing above 2.5. Then I'd be looking at about 2.7. Next chart, gold. Minor new high today, but currently trading a little bit lower. I think I'm going to have to stick to my bearish longer-term opinion at this point. We got very, very, very overbought in the 90s, which is fairly rare. in the last couple of months, March, April. It did start a move down. This looks like just a simple rally correction in what could be longer-term bear move. Now, you need to start to close back below 2,283 in order to have a breakout to the downside and perpetuate the move down. The next, it would probably be 2170. And then you may even get all the way down to 2019-ish. But let's see it start first. Today, higher high with a slightly lower quote at the moment. I'd like to see, those bearish engulfings were not overbought, so I don't have all my goodies in terms of starting to be outrageously, stupidly bearish, but it could develop. Next, silver. Double top, maybe. Overbought again, yes. Overbought pretty good too, 84, 85, 86. I doubt we're going to have a bearish engulfing today. It always could happen late in the day. So that's what I'm looking for, but I don't think I'm going to get it. Maybe tomorrow or the next day, though. Watch out for a double top here. I do not recommend going long at this particular point. Next. Don't want to go long either in platinum. Very overbought. What are we getting here? Wow, 92. Look at this. Blow off top comes to mind. Unchanged current quotes. Got a higher high. Wouldn't take too much to get below yesterday's low, and they'd have a red bearish engulfing. That would be a whopper. Got a good buy signal back here. Don't trust this one because it's too thin. That's not really, an active market to base reversals off of. But this was probably adequate enough. Oversold did the job there, oversold did the job there, but not a lot of great signals in platinum lately. Sorry about that. Copper. Bearish engulfing worked for only 2 days. Disappointed in that one. But now we're overbought again. We have a indecisive inside trading range today, doji, and lower quotes at the moment. Maybe we're starting to work our way down. First indication would be, of course, getting below and closing below yesterday. And then, of course, another few more days. Really, the trigger is going to be at 4.4 and lower. And then we'll probably come all the way down to about 4.0240. And we've got OJ. Again, possible blow off top, extremely overbought. Looking for a top here in orange juice very soon. Gap to go back down and close right smack at support area. And that's an original breakout gap to the upside. I think I said that on that date, which was May 10th. So I'm looking at a toppy situation and a correction back to support, and then we'll see what happens next. Cocoa, different story completely. Little bit of a double bottom, maybe. Looks like you got a bearish engulfing just slightly today. That could mean the double bottom ain't going to hold. And if we start closing below 6,968, no more double bottom, and you're going to drop it down probably to at least 6,130 and maybe even lower than that. Again, this is profoundly overbought at 94, 95, which is about as rare as a snowball in hell. You don't get those readings very often. And this could be a very long-term top in cocoa. Next, I've got to say the same kind of thing for coffee. Double bottom potential. Looks like it may not hold. It's already testing major supports already, support area. So breaking into new low ground would probably challenge the low of this big pennant formation. Bearish, think we're going to break these lows, get oversold again probably. Next, we got sugar. Little double bottom did not hold. Little rally did not make any new highs of significance. And a couple of 3-4 days ago, we just broke the support. And if you look at the bigger picture, and a lot of people don't do that these days, there is a double shoulder slanting upward slightly, head and shoulder top in May, June, July of 23. A broad, flat, basically double the head of a head and shoulder top starting on September and a half and also going to late November of last year. And a slightly downward sloping shoulder that is about the same length and time. You see the symmetry here? This shoulder is about the same in time, sloping down. This is the shoulder that is slightly upward slanting, about the same amount of time, and the top is relatively flat, a little larger. Doesn't have to be the same amount of time. It's the shoulders that look symmetrical typically and similar in shape and size. Not always, but often. The neckline's broken, classic. A couple of days ago, 2 days, yesterday, came up to the neckline, stopped cold turkey, classic. New lows, it's going down, in my opinion, to 1360, 13.60. And back to cotton, our last one, we have a new low for the move down 2 days ago on a closing basis. But yesterday, with new lows again, it jumped right back into the same trading range we had before. So this now looks like a false breakout. And I'm looking for a bounce back up to about 80.20. That's a lot of resistance. Maybe even 79.75. That's probably a bit better of a price, yeah. And then probably lower again. And I think that's it. Thank you very much. You have a great day. Sorry this one's so long.